Welcome to the AI Fin News channel. The most relevant news and analysis from the world of finance and cryptocurrencies.
Hello, friends, on the iFin News channel. Of course, there's not much that can compare to the Federal Reserve's decision on interest rates and the accompanying press conferences by Powell. However, we'll have a mini version this week. So, watch this video to the end. We usually discuss the traditional market in the second part of the video. But for now, I'd like to remind you that it's Sunday, and we're looking at upcoming events in the crypto market and the traditional market. We're also checking in with the whales on the Chicago Mercantile Exchange. There are some changes there. Before we get to what the whales are up to, let's talk about the environment around this exchange. We see a neat numerical closing at $26.55. Of course, there's nothing nice about the price going down, but those 3 5s really stand out. We also have 2 gaps, one above, marked in red, and one below, around $20,000. It's worth noting that starting from March, all gaps opened after that date were closed right away. Currently, the price is hovering around the closing price of CME Bitcoin futures, and once again, there's a good chance that unless something extraordinary happens, we'll start from here on Monday, as has happened many times in March. Bitcoin futures will be expiring next week, and in the past, when markets were more immature, or when futures were in their infancy, this often led to increased volatility. Later, other factors started to influence the market, but traditionally, on the last week, open interest and trading volume significantly increase on this exchange. Perhaps players are protecting their positions, but now the main question is, shorts or longs? Let's find out. Well, the data from Bitcoin reports reflect a noticeable increase in bearish sentiment among large speculators. Large funds actively increased sales and purchases, leading to a reduction in the net long position on Bitcoin. This net position started to decline after multiple all-time highs. Continuing this trend could contribute to a decline in the cryptocurrency. Hedge funds, which trade more long-term, have also started reducing their record net long position in Bitcoin. However, small speculators have increased their net long position in Bitcoin from 6-month lows. Bullish sentiment has grown among small players, but this group of traders typically doesn't have a significant impact on the market. However, they tend to be right more often. If they were bearish last month, we see the price gradually moving downwards after a long hiatus. They went against the big players and bet on a rise. In general, the situation is interesting, but of course, I'd like to remind you again that blindly trusting, for example, small speculators is not advisable. They've made mistakes too. Let's turn the page to Chicago and look at the upcoming events, where only internal ecosystem events are on the horizon. Each coin individually doesn't matter much for the entire crypto market, just like token unlocks. It can also affect a particular blockchain in terms of price. When it comes to the crypto industry, naturally, various SEC news, US regulations, and possibly some information about ETFs take the forefront. Although all major events are expected in October, this week doesn't seem to herald anything particularly significant. Even last week, if we recall, there was a major event, the postponement of Mt. Gox payouts to October next year, but the markets didn't react to it at all. Perhaps this saved them from the traditional crash where everything tumbles. First, let's take a look at the fading earnings season because after this week, the markets will enter third quarter earnings reports. What do I know from this list? Well, of course, these are hypermarkets in the US, Micron, Nike, BlackBerry. But from a human perspective, it will be interesting to see. This will also allow us to assess consumer sentiment. Markets are already anticipating third quarter earnings reports, starting with the banking sector and gradually moving to global events. I typically divide everything into 2 parts, the world and the United States. But first, let's talk about the US, where we expect a story of shadowing because not all Republicans are keen on making deals with Democrats. This could have a significant impact on the market. Next, there's the impeachment issue. So, depending on how events unfold, there will also be movements next week. But let's begin with a review of global events, starting with the price of oil, which is fueling concerns about global inflation. But first, let's focus on the Bank of Japan. The head of the Bank of Japan is scheduled to speak on Monday, and it will be interesting to hear his remarks after the central bank's policy decision on Friday. This week, the world's third largest economy will also release a series of data on Friday, including inflation data in Japan, retail sales, and industrial production. Of course, the labor market data will also be of interest. Additionally, Vice President of the European Commission will be visiting China, where investors will closely monitor data on business activity indices. I'd like to remind you that I conducted a thorough analysis of how these indices have been performing in Europe in my previous video. Now, it's China's turn. As for Europe, on Monday, Christine Lagarde, President and head of the ECB, will testify in the European Parliament, where the decision to raise interest rates, which was made last week, will likely be discussed. In principle, this is the most prominent part of the economic agenda in Asia and Europe. Now, let's move to the United States. Speaking of the intersection of economies, it's worth noting that in the US, the annual indicator that excludes food and energy, which the Federal Reserve prefers, likely dipped below 4% for the first time in almost 2 months in August. At the same time, it's expected that the annual indicator of core price growth will slow down to 4.8%, which is also a 12-month low. Such coincidences could calm down the official representatives of the Federal Reserve and the European Central Bank after a tough week when each of them signaled that the tightening of monetary policy might be completed, or at least paused for now. The focus will be on maintaining interest rates at a prolonged level to fully suppress inflation. However, they have reason to be cautious as oil is approaching the $100 mark, and the rising cost of energy sources is already having an impact. It's expected that the overall index of personal consumption expenditures, which the Federal Reserve favors, will rise on a monthly basis to one of the highest levels this year when the report is released on Friday. Interestingly, this report could be the last government document that politicians will see ahead of a possible government shutdown, as reported by Bloomberg, which will begin on October 1st. This was similar to what happened in 2013 when data like employment reports and others were published with significant delays. Also, all eyes will be on U.S. oil inventories and, of course, Cushing inventories, which have genuinely decreased according to forecasts. It might seem that taking oil from storage is no longer possible, but the Biden administration is allowing it. Let's see if the analysts are right. Additionally, I want to draw attention to the fact that Federal Reserve Chairman Jerome Powell will meet with educators. I should note that this meeting will take place late at night according to my time, and I won't be following it live because I don't think he will say anything new this week. However, there is still a risk that I might injure myself in frustration, biting my elbows, as market dynamics can change significantly after his speeches. That's my dark humor for you, and this is just my personal opinion. Nevertheless, we will discuss it in my channel in video 29 and slightly earlier. We are definitely keeping an eye on the members of the Federal Open Market Committee, FOMC, in the U.S., such as Neil Kashkari, Alston Goolsbee, Thomas Barkin, and even John Williams, who will speak at separate events and discuss policy. I would like to remind you that last week we got acquainted with the opinions of those who said they are not planning to lower interest rates and may even raise them.
Subscribe if for some reason you're not already subscribed. Please click on the bell so you don't miss out on new videos, because there will be more to come. Bye bye.